Hello guys, what's up? So let me take you through this simple trade that I have running that I took the other day. This is my first time actually trading directly on Ethereum. So I've never done an Ethereum trade, but it's a simple trade that I took, and this is what I have running. So Kai, relax. So this was a simple trade. So this is a 4 hour. If you go to the daily chart, basically what I was looking at. So I had two entries on this trade. So if you know what I'm doing, I'm always looking for what is it called? Correction. So I'm always looking for an impulse. So I always have to define my impulse and then look for correction and then get an impulse. So what happened with this one? So this was a good impulsive trade. I was just counting the waves. I don't do this very seriously, but I'm starting to incorporate it, and it's something I'm back testing the Elliott wave count. I used to do it a lot, and now I'm bringing it back. So I had this first wave, then a correction, then this second impulsive wave, which is basically the third wave, and then we have this correction in the form of a flag. And then I had now this entry going back to the upside. Now, if you don't know, cryptocurrencies are not like the other CFD markets, like what we normally trade. So they also trade also during the weekend. So when you're trading through brokers like Paperstone, you're going to trade this using a CFD account. I have not tried this, so I'm still yet to try. I don't think you can execute a trade through Paperstone or normal brokers during the weekend. I'm not sure though. I'll confirm, but you can do this over Binance and the other fully crypto exchanges. But the traditional ones, I don't think you can do that. So this trade, I wasn't able to execute it over the weekend. The good entry came on Sunday, but I wasn't able to get it. So basically, what happened? You can see this fourth correction is sort of a flag pattern which I'm normally looking at. You can see even here I've written a few pointers. Wave correction, wave 4. You can see how it came back to this support. At first, I had a different angle to this. I sort of had it like this. So I had an earlier entry which came out as a loss, but not a bad loss, but I got a re-entry. So I had this first entry here. So you can see this rejection of this level, and if you zoom out, you can see it's actually a strong major level. You can see, so I won't go all the way back, but you can see this resistance, and you can see now here I was looking for sort of this support. I was looking for this move to the upside. However, that's not what happened. Market pushed further down, and we got a correction to this level. Okay, so if we readjust, this is where you have to be open-minded when you're trading and not be fixed on one scenario. That be open-minded, don't let a loss. So the first trade I took actually came out as a loss, a small loss. So I took that loss, but then I got a re-entry on this one. Now this is on the daily chart. If I go to the 4-hour chart, did I finish saying every point I needed here? Yeah, it was a 38.2 Fibonacci level. If you're taking this impulsive move from here all the way to here, this correction was at 38.2, and it was also at that support level, the secondary support level. This was the primary one, this is the secondary one. Okay, and then we go to the 4-hour chart. Now, something I knew at the back of my head, but I didn't wait for, was this full corrective wave bound. So this is an ABC correction. The C came in the form of a wave. 1, 2, 3, 4, 5, which completed fully. You can see for that week, market was trading below the S3 of the previous week and of last week. So that's why I took that entry, because market was trading. That's one of my criteria when I'm looking for entries, markets to be trading below the S3. It was also what we call an equidistance. So I normally measure my equidistance. Over here, I'm sort of fully giving you how I fully look at my markets. It's also equidistance. I think I'll talk about that later. And then on the 4-hour, taking this as my impulsive move here. Okay, so if I take this as an impulse move from here to here, now leave alone the bigger one that we saw, you can get that this was a perfect 61.8 correction. Starting this as my starting point and this as my ending point, we get a 61.8 correction. And like I said, you can see the entries came here, best entries. So I took this trade earlier on here, which came out as a loss on Wednesday. Market spiked me out on Thursday and Friday, waited for markets to get a clear direction, clear sentiment, and all that. Then I got this entry now as the week ended, because if you look at the weekly chart, we had a very good weekly close, rejection close here. You can see that now you have to always balance. You can see this weekly close was for me an indication that I can go long on that one, and that's how I went long. Currently have this trade running at about already with a risk reward of about 1:4. broken even on this trade, having this trade running at currently just slightly over 2% on that one. You can see that this level over here, I expect some rejection. For the people who trade trend lines, it's a rejection level. So I anticipate markets to have a bit of a correction before we go to the upside. However, if momentum comes in, then I expect these markets to continue pushing to the upside. If you're trading Ethereum, you also know we're always moving in tandem with Bitcoin and the like. So when I go to the Bitcoin side, what I'm looking at is still more bullish pressure. You can see this is what happened the other day, sort of also slightly a flag pattern. Not the best ones that I like looking for, but still, all in all, it was still a flag pattern. I didn't take this trade though. I just have the one that's running on because you can see here the best entries. You can see when market came down here, you can see the timing there was Saturday, Sunday. So I couldn't execute this trade over the weekend, and by the time it was Monday, markets were up here. Okay, this was Monday. This was a very bad RR for me, but this was a good trade. If I took this trade, this would be if I got this trade over the weekend, I could have gotten this entry around here. I could have had my targets here. I could have put my stop loss just slightly below this level. Could have had a good 1:3 risk reward ratio on that one. But that was a good trade. You can see these flags, how still they work perfectly well. You can also see this flag here, which worked perfectly well. If you got this entry around here, you can see how markets reach previous high and they get a good turning point. Another 1:3 risk reward on this one as well. Multiple, another one here. So for my pattern, that's my pattern. That's what I trade. For me, it works impeccably well. Yeah, but I believe there'll be a bit of a shortage now. Today's Friday, Saturday. I believe there'll be some corrections here. A lot of bull traders will take their profits. A lot of support bearish traders will start taking a bit of pushing this market a little bit to the lower side. Remember, I normally say when market is above R3, I'm never looking to take any trade at all. So that was just a quick one on that one, and I'll do the next analysis on oil. It's a market I don't trade, but I'll do an analysis on that. So see you on that one too. So like I said, guys, the next one I'll do is on oil. And basically why I want to do this is because I want to show you the importance of trading in the direction of the trend. So if you look at this trend, of course, it's on the downside. And I normally tell people, define the trend. The true trend is defined on the daily chart, the overall big trend. I'm a swing trader. So if you're looking to trade scalping and all that, I don't have any advice for that. I don't say it doesn't work. My friend Rick is a very good day trader. So Clinical FX can help you on that one. I don't know how to help you on that one. Everyone has their own trading style. I even tell Rick myself, my friend, what you trade is just your style. And also he tells us the same. So anyway, so this trend you can see is on the downside. Now, these days I focus mainly on indices, commodities, and crypto. Like you can see here, trading pairs. I have gold, I have oil, I have indices, I have cryptocurrencies, most stock markets here. And that's what I focus on. I don't do any currencies anymore. I don't look at them. I don't trade them. I just put them away. So how do you define a downtrend? Lower low, lower high, lower low, lower high, lower low, lower high. Remember, I've taught you guys this multiple times. The best double tops are found in a downtrend. The best double bottoms are found in an uptrend. So you can see this, for example, is a double top rejection of that level, of the resistance level. So that's to the downside. You can see that markets moved to the downside, pushed and created a new lower low. Markets came up, didn't push below this level, created a lower high, and markets pushed further down. So we've had multiple patterns here. If you're trading oil, the only thing you need if you're trading the flag pattern, because that's what I'm familiar with, is to be patient. Nothing else. If you're patient enough, you could have gotten very good opportunities with this one most recently, because this is the action that's been happening. So over here, there are sort of two flags that were happening. I'll show you on the lower time frame. But if you look at the bigger picture, baby guy, chill. So if you look at that, that's one big one, okay? And this was a very good one. This entry here was sort of impeccable. You could have gotten your targets as soon as yesterday or the day before, depending on where your targets are. But I'll show you on the lower time frame. But this is sort of the bigger picture flag, okay? If I just put this to be visible on the daily, there were two extra opportunities on the 4 hour. Okay, like I said, best double tops are found in a downtrend, and that's what we got over here. We got a double flag pattern in the form of a flag pattern. So if you come here, so there's this flag here. Now this is not the main one. Remember, the one I've shown you on the bigger chart starts this whole correction. Okay, this whole correction, but we got this one. So there's one most recently here, which I've not actually shown. You can't see it as clearly on the daily chart, but you can see this one, market impulse. Remember, you always have to look for the preceding impulse. It has to be well defined and you have to spot it. So this is an impulse so that you can measure the correction. Then you got this impulse, then you got this flag to this level, and this is a short trade you're looking for. You're not looking to get this buy trade. You see this buy flag? I never trade those ones. You're never looking to trade these ones. If you're trading this, you won't get a very good experience in the long term. In the moment here, you can see as if this one worked, but in the long term, they don't tend to work. They're not tending to be successful, especially when you're trading against the trend. So this was one successful trade to the downside. And that's why I moved to trading commodities and indices and cryptos, because they majorly trend. So once you define a trend, it's not like currencies which are looking for equilibrium. They're looking for fair value. They're looking for market efficiency. These ones are sort of looking for where the value is and where market is going. So this one has been defined on the bigger chart as a bearish market. You can see this impulse to the downside. The target was here, previous low. Markets came, we got this defined impulse. The correction for this defined impulse was 50%, just like we got on this one. Taking this, you can see my Fibonacci. This as my starting point, and this as the lower end. We got a 50% correction that will have given you this as a, there you go, as a, another, my system roughly gives a risk reward of 1:3. So you've gotten here 3% if you risked 1. You've gotten another 2.8, which is about 3. You gotten a 6% return. Look at that touch. And I keep mentioning this a lot. Look at that touch. Previous low. That's the target you want to be getting. Just like I did with this one. This was the previous low down here. You see that? Previous low. That's why you want to be putting your targets. Previous low, okay? Look at that touch. If you put anything extra than that, market will have gone back all the way to your entry. Maybe it removed you at break even, because I'm pretty sure over here you could have broken even on that one. And markets did the same. If you didn't get the first opportunity, it gave a second opportunity. This was much better, a much better signal. It was a double top rejection. It was at R3. It was a pin bar, not a pin bar, a shooting star. And markets closed back within the flag, giving you a very good touch here and a risk reward of about there 1:2. That one, don't put it too tight, just slightly above the wick. That will have given you another 1:2.5. So these three trades combined will have given you a good 8% depending on your risk reward. Sometimes I risk 1.5%, sometimes I risk 2%. So between 8 to 16% on the higher side, just following the trend. As simple as that. Okay, so that's what I have on this one. And one more trade that I'm waiting for to materialize is on US30. There's a bit of a correction building up. However, this market has had a very strong bullish momentum. You can see this. I had this correction here. I was waiting for markets to come here to the 61.8. However, markets have pushed to the upside. If they get a correction still and doesn't push to a new high, I'd still be anticipating this movement to the downside. However, momentum is strong. So if market breaks to a new high, then that pattern is gone. No more flags on this one until we get a new corrective pattern. So that's basically what I'm watching. Those are the opportunities I have. I shared all this in the live trading session with our students, especially the Ethereum one. I remember that's the one I talked about last week when I was with them. I had my first entry, like I said, got into a loss. Then now I have the second trade that I'm watching that I got into, and it's broken even and is running. And that's why we say never have attachment to trades, and it's running quite successful, and we'll see how it goes. Like I said, I'm expecting a bit of resistance where we currently are because of the counter trend, and we see how that goes. So that's it from me, and I'll see you in the next one.